Welcome to Premium Cashflow Real Estate Investing Podcast with SK051. During this program, you will hear guest experts sharing their experiences, best practices, and market insights. We discuss investing in multifamily apartment complexes and how a busy professional can passively invest hassle-free in various opportunities. Your host, SK051, owns millions of dollars of assets and has done thousands of value-add projects over 20 years now. So listen in for insights. Here's your host, SK051.
Welcome to another edition of Premium Cashflow Podcast. Today I have the pleasure of welcoming Dave Rice with REI Bookkeepers. Welcome to the show, Dave.
Thank you. It's a pleasure to be here.
Thank you. And Dave Rice does accounting along with his wife and his team of bookkeepers. They handle a lot of sensitive information and make sure all their clients' businesses are properly up and running from an accounting perspective. So today we are going to dig into sort of the best practices and what sort of the experiences Dave has in terms of how they have helped clients and what are the best practices they have heard. So I appreciate you taking time, Dave. Walk us through some of your background, Dave, as to how you came about in such a big way for helping the investors from an accounting standpoint.
Well, thank you. Happy to. My wife, Lori, and I have been real estate investors for a number of years. And when we sold our last business, we got into investing. I was doing remote fix and flips. I'm based in Naples, Florida, but we were working in the Midwest because we liked the prices there.
Sure.
And so we were doing them, and we had some great ones, and we had a few failures, just like everybody else in this business, if we're being honest. And I was talking to another investor one day, actually, I think via LinkedIn, and somehow bookkeeping came up, and he asked what we were doing, and I said, well, my wife, Lori, is an accountant and has done the books for our businesses for many years, and that's what we do. And he said, well, we need help. And we got talking about it. We've always been home-based. We've always run our own business out of our home. And so we put a note in LinkedIn. This is about 3 years ago, and our business blew up.
I see.
We started getting requests from all over the place, and it's become our full-time occupation. It turns out we've got a knack for it. My background is small business. I've built and sold a couple of pretty successful small businesses. Lori has an accounting degree from the University of Wisconsin. We're both Wisconsin graduates, proud Wisconsin graduates. And she has an accounting degree and actually has a CPA license that's now lapsed, but she really knows the background. And what we learned in bookkeeping is that anybody can say that they're a bookkeeper, but we are real estate investors. We understand real estate investing from a bookkeeping perspective, and that's our niche. We only take on clients who are investors. So we're able to really hone in on a niche and really get good at what we do, and that is providing premium bookkeeping services for other real estate investors.
Awesome. Now, give us some, some information about how your team is, how large, team is, or what sort of different activities within your services you provide. I know you said bookkeeping and accounting, but are there any other facets within that perhaps you focus on?
Well, we're very careful to stay in the bookkeeping realm. We're not tax advisors.
Sure.
We get lots of questions, and we really prefer to leave the tax decisions to the experts.
Sure.
We believe that as bookkeepers, we can provide a great service to investors, but real estate investors need a lot of special tax advice, so we stay away from that. We really want to stay inside the bookkeeping realm. You asked about our team. Our team right now is a team of 6. My wife Lori, myself, and then we have 4 other bookkeepers who work for us. That team is growing rapidly as we grow.
Sure.
We're all virtual. We have clients literally all over the country. But with today's technology,
absolutely,
we didn't have to make any changes in the last few months. We've been using Zoom for the last few years. We've worked between the telephone and video conferencing and email. We're able to function, where we want, and when our clients need us.
Absolutely, absolutely. I think with the digitization of everything, including, the conferencing and, just like the medium that we are conversing on using, let's say Zoom and other webinar platforms, it's amazing. You could be almost virtual and do everything via emails and video phone calls and stuff, right?
Exactly.
Awesome,
Exactly.
awesome. So now, Dave, give us just a general sense of what a sort of a basic accounting setup should be for someone looking to, take their baby steps into, just getting themselves set up.
Okay, happy to. This comes up very often. We often get inquiries from investors who are relatively new in the business and maybe not ready to hire somebody like us yet.
Sure.
But we like to get them off on the right foot. And it's a very simple few steps, of course. We tell them to, if they're going to establish an entity, they should do that and talk to their legal people about that and decide whether they want an entity. And then we recommend that they set up a business bank account. And, if the bank offers you a business credit card and a line of credit and all that, take everything they give you. But it's important to establish a business set of business bank accounts. And to right from day one, you want to conduct your business out of that bank account. If the business needs money, take your personal money and put it into the business and pay the bills out of the business banking account. That's step one. The second step is we suggest that they set up an email address just for their business so that as they generate receipts and documents, they can scan them, take a picture of them with their phone or scan them and save all that to that email address. And now all of that information is going to be in one place. So when they're ready to hire somebody like us, we can go in and we can access that bank account, we can access that email address, and now we can put together a complete set of books with all the information that they've been keeping all along.
I see. And so to clarify there, Dave, you are saying that having that shared email address kind of acts like a glue between your team and the client, sort of, right?
Well, right. Initially, before they hire someone like us, we have them make an email address that they can keep all of their information in. Right. And then what we do when somebody becomes one of our clients is we actually create a unique email address for each of our clients so that they can provide all of their information, documents, receipts right to us. We know who it's coming from. We know where it goes. And then we can handle all those receipts.
I see. And just on a related topic, Dave, do you think that since, I guess we are talking about emails and things like that now with, let's say, Dropbox or Google Drive, these type of shared, things that we have, right? So can the data be stored in them? And does your team function using those shared folders and things like that as well, or is mostly email?
Well, we do mostly email, but we're starting to work more and more in Google Drive. We're fans of Gmail, and one of the big reasons is Gmail to Gmail is all encrypted.
Sure.
So we know that the Gmail address that we set up is encrypted, and 99.99% of all our clients already have a Gmail address. So we like to use Gmail to Gmail. If anything is safe, we think we're as safe as we can be using encrypted email. We're starting to move more and more towards Google Drive. It's becoming a good repository for our clients to put HUD statements and larger documents into. So we feel good about both of those arrangements.
Glad. Thank you for sharing that. Now, are there any best practices, Dave, in terms of how someone should be like maintaining their receipts or invoices and keeping them secure, or always sort of sharing with their accountant and things like that? Could you maybe share with us some tidbits regarding that? Sure.
I'll explain it kind of the way we operate with clients, and then that may be a good way to illustrate things. We work in QuickBooks Online. All of our clients are in QuickBooks Online with their own accounts, and so part of our efficiency is using one set of accounting software, and we happen to like QuickBooks very, very much. It's not perfect, but it works really, really well for us. And so what we do is in QuickBooks, we actually set up so that all their business bank feeds are actually live right into QuickBooks. So they feed right in there. And then the clients provide us receipts and backup information for those transactions. We actually take all those receipts and documents and HUD statements and electronically attach them to the transactions. So by doing that, not only are we keeping track of their books, but we're generating a book of proof, of evidence of what has happened, because we all know that as your income goes up, at some point, the guys in Washington may want to take a look at what you're doing, and we may need to prove something. So we don't require anybody to provide us receipts, but if they are willing to provide them to us, we will attach them, and that becomes essentially a long-term permanent record of everything that happens, and it makes the books much, much more valuable with all the proof behind them. From a client's perspective, all we ask is that they conduct their business in their business bank accounts and hang on to their invoices electronically, of course, is what we're talking about. And it's usually no more complicated than taking the smartphone that we all have. You can take a picture, or you can turn them into PDF files right on your phone. And there's no reason to not keep track of all of that. You can throw it into an email account, set up a separate folder for every month or every year, and that information will be there forever.
Sure. And speaking of that, that was going to be my next question, Dave, is that, there's a law of retention as to how many years you should keep the receipts and different books and things like that. Can you share with our listeners, like, how many years should they retain their records from a compliance perspective?
That's more of a tax question, so I'm not 100% sure, but everything I've always heard is 7 years.
Right.
And so that's what we do. Once somebody establishes a QuickBooks account, that data is there as long as they pay for the account, and it's even there another year after they stop paying for it. We always tell our clients, if they decide to leave us or close their business, they should make a copy of all of that and save that electronically so that they have a digital copy forever. The general number is 7 years, and honestly, my wife Lori and I are even more conservative than that. We keep everything for 10 years just to be safe.
Right. Got it. Now, you mentioned QuickBooks, software, Dave. What are some of the features you like, and you're like such a fan of QuickBooks? Because, and the reason I ask is that nowadays, a lot of times, investors are taking on their own property management software, and a lot of, like, depending on the software, you have some pieces of accounting already built into it, right? Now, when we bring in a QuickBooks solution, it sounds like, on one hand, definitely it is a very powerful medium, right? But I guess one perspective also can be is that investors might also think that, oh, geez, you know what? My property management has all these different features built in. Why can't I leverage that? Could you maybe share some of your thoughts around that? What's QuickBooks great at, and what some of are sort of the competing differences maybe?
Sure. There are plenty of property manager platforms out there that have some basic accounting built into them. And the accounting side of those actually work fairly well. They're quite limited in the reports and the custom reports and things that we can pull. We're not super knowledgeable about them, but we do see them once in a while. Where QuickBooks shines is we can take an all-encompassing approach to their books, where the property manager is only going to keep track of those properties that they have in a rental situation, and keep track of the expenses that are associated with those rentals. With QuickBooks, we take a number of steps beyond that. Not only are we keeping track of all the repairs and expenses of a property, and not only are we keeping track of the rent, that's really the two things that the property management software is really good at. Is tracking the rental income and tracking the repairs and maintenance expenses.
Right.
Where we step beyond that is when we build a proper set of books for a client, we're going to build a balance sheet. We're going to show the value of their assets. You should be able to look at your balance sheet and know and see how many properties you own, what the value is of those properties. In other words, what you have invested in them. If you have a mortgage on those properties, you should be able to look at that balance sheet and know how much you owe on that mortgage. You should be able to know if you have an escrow account associated with that mortgage. You should know how much is in that escrow account. So by tracking all this, we can keep track of how much you're spending on insurance per year, how much you're spending on property
The
interest,
taxes, sure,
and property taxes, property insurance, all of that. We can track all of that inside QuickBooks. Plus, every business has any myriad of other expenses, including many different marketing expenses. The property management software doesn't address that because it's only concerned with the properties.
Sure.
We like to keep track of all the marketing expenses, and we break them up by channel. For instance, if you're using 3 different marketing channels to look for deals, we will track the expenses in all of those marketing channels. So we want to be able to tell you, here's what you spent on direct mail. How many deals did you get from direct mail? Here's what you spent on cold calling. What deals did you get from cold calling? We want to provide some evidence so that they know their money is being spent well.
Sure. I appreciate that detail there, Dave, because I think you brought up something very important there, is that, pretty much QuickBooks will act as like your dashboard of sorts, wherein, you can see all the higher level buckets. Okay, what are your taxes, insurance, your escrow amounts for different things and stuff like that. And I never thought of it that way, but it's very powerful that you can just look at it and from a real estate investor's perspective, I know for sure that many times I have personally struggled with saying, oh, geez, what is my tax or what is my insurance amount for this property and things like that. So I think having that is very powerful because, as all investors know, all the time, every other month, you are required to send some type of statements or some personal financial statements of sorts and things like that, to whether it's your banks or, different folks, right? And having sort of that dashboard is very important. And I think you also raised a very important point where you were saying that at any point in the month, you probably should know, okay, what is your mortgage balance? And that sometimes becomes like almost like 2 or 3 days of affair sometimes, because you're emailing the bank rep and getting the information, and depending on their schedules, you sometimes don't even get information for a few days. So I appreciate you sharing that. Now, Dave, in your opinion, you've seen the industry a lot. You helped so many clients so far. Help us understand the complexities. And where I'm going with this question, Dave, is that investors all the time are, opening new properties or new accounts, or let's say folks are doing a lot of syndications, and you're rolling over from one to other. So in that case, explain us how you handle some of those complexities.
Happy to. That's a large part of our work, actually, because our clients are active investors. They're acquiring properties, they're selling properties, they're rehabbing properties. We don't have as many syndication clients, but probably more like your listeners may be, but we have a lot of smaller investors who, like I say, they're often a typical month. They might buy a property or two, and they're in the process of rehabbing 3 or 4 properties. They're in the process of turning maybe 1 or 2 of those into a rental. They might throw in a couple of wholesale deals in that, and the accounting for all of those is very, very different. And we go through this with each of our clients. Like, for instance, with a rehab property, if you're buying a property to flip, you buy it, and we track all of those expenses for buying the property, the purchase costs, all of the rehab costs, even if there's interest you're paying to a private lender, utilities, labor, materials, all of that goes into the asset. And it becomes an asset on your balance sheet until you sell it. Once you sell it, it leaves the balance sheet because you don't own it anymore. And at that point, we can take their closing statement when they sell it. We know what they sold it for. We can figure out how much they had invested in it. and we can give them the exact profit that they made on that property. And you'd be surprised how many people, when they come to us, they'll say, the last 6 properties I've sold, I have no idea if I made any money or not.
I hear you there, because when everything is not properly organized, it just becomes like one big bucket and you have no clue.
That's right. That's right.
And trust me, I've been there, done that actually. Now, how does the ongoing relationship in the very cases that you describe, Dave, how does that ongoing relationship look like? Meaning, are investors sending you balance sheets or reports from their property management software? Like, how does that look like on a day-to-day basis? Like, what do you see your staff busy? Like, what sort of input they are getting? I'm kind of curious to know, like,
Sure.
well, how does that pan out from day to day, basically?
Sure. Happy to answer. What happens is, I have a string of email addresses on my computer, and throughout the month, there are things just landing in there all day, 24 hours a day. What we instruct our clients to do is, as soon as they receive their property management statements, their mortgage statements, their monthly bank statements, receipts for all of the different auto pays that they have, we just tell them, just forward that to us as soon as you receive it. And it sits in their email address, and that becomes our to-do list, essentially. So we're going through, and throughout the month, we're just, doing our best to keep up all the way throughout the month to make all those entries. And it is complex. We're going to track, like with a rental property, we track the rental income, we track repairs, we track if they're making capital improvements. Those are accounted for differently.
Sure.
And so all of those things have to be taken into account. We need to know what the intent is of the property, so that they can do that. Most of our clients are not in their QuickBooks account very often, if at all. We've essentially told them, look, but don't touch.
That is interesting.
But we want them in there because, like, for instance, if they're doing a rehab project, they can look in there anytime they want and know exactly how much they have invested in that property. And that sometimes becomes very important, because sometimes the rehab costs can get away from you. And by making sure that we have a report that they can easily access, so they can know exactly what they've spent on a property right up to the last day or so, that really helps them manage their budgets. That's a really useful service that we provide. But we don't ask our clients to make any entries in QuickBooks. We don't want them making entries. We want them to leave that to us.
Sure. So are you saying, Dave, there that you are giving them sort of a view-only access so that they cannot edit any entries and things like that? Is that typically
No, we don't limit their access, because we believe that the data is theirs. We just ask them not to fool with it.
Sure. Yeah, I know. And sometimes, few entries can create a big cascade of problems for you,
Exactly. But we make it clear. We always like to have our clients, we want them to own their data, and we manipulate it. But we welcome them going through those reports. And it's interesting. We have clients who want to go through and look at every single line of their income statement every month and go through it with us. We have others who never look at it. They just want to know that it's right, and they want to hand it to their tax person at the end of the year.
Right. And that was going to be my follow-up question, Dave, is that I think the end result or the end objective is mostly to kind of create a consolidated, concise statement you're giving to either tax person, or at any point during sort of the year or the month, you're just looking at a high-level statement that, okay, where we are, how it's looking. Is that kind of what the general purpose would be?
It is. And many of our clients say, I don't really need monthly statements, but our response always is, the monthly statements are a self-imposed deadline from us. We want to keep up. Sure. And by telling ourselves that we're going to get you statements, usually by about the 10th of the month, by the 10th of the following month, we have the previous month's statements ready for them. And by putting that self-imposed deadline on, we keep up, and we force our clients to keep up. We learned quickly that once you get past a few weeks and we start asking questions from last month, people just don't remember what happened if they don't have the paperwork. So it's a deadline for all of us to work towards to keep up. And we've actually had clients who've come to us and said, they didn't get any information from their bookkeeper until December of last year. Well, that's not soon enough to do anything about it or to even discuss it and adjust. And we meet with our clients regularly to go through their financials, and we talk about, here's where you're spending money, here's where we want to help them control their spending and control their budgets and make sure they're spending their money in the best possible way.
That's awesome. Thank you. I appreciate that, Dave. Now, Dave, explain us, like, in your experiences, what some of the limitations that you see currently between whether, that's perhaps how investors are setting themselves up, or now that you have a flourishing practice, where do you see some of the limitations within yours, in the accounting realm of things of sorts that perhaps you would like that, hey, whether it may be a tool or a habit or a system that perhaps will, help you get better and maybe have better results for clients?
Well, it's a good question, and we're always talking to our clients, finding out how we can do things better, how we can be more responsive to them. That we feel that's really important. We're very transparent, with our clients. And what's interesting is our clients are really busy people. If you're an investor, you know how valuable every minute of the day is, and so. What I always tell new clients is our goal is to be completely in the background. We want to be your behind the scenes people that keep things running, so that when your lender calls and says, I need an updated statement so that we can redo we can refi your properties, we can generate that for them. Our goal is to just our goal is to make their life a little bit easier and take something off this investor's plate.
Sure. Now, since you've seen these many clients, Dave, give us, like, maybe perhaps two extreme examples of investors who came prepared, or how perhaps a shabby sort of setup looks like. And I guess where I'm trying to go with that is that, what sort of setup, like, investors should gear themselves to, so that they don't have a sort of a spaghetti of sorts. And I'm speaking this from experience, to be perfectly honest with you, and a lot of statements that you made really ring true, because I have been through, I own a couple of hundred properties myself, and I've been through countless cycles where, I'm going to refi, but I have no confidence in my numbers, saying, oh geez, I don't even know how much I spent, because I would be doing like maybe 3, 4, sometimes 7 rehabs at a time. So I'm just doing a best guess, and I did not have, although I had, all kinds of softwares and, electronic receipts come to me from Home Depot and probably all kinds of stuff, but I just never had the bandwidth, right? So I'm kind of perhaps being very candid enough to admit that I fall myself into that shabby category. But in your experience, I know personally as well, many other investor friends who are, pretty much very good into bookkeeping, whether they're taking pictures or keeping receipts in the shoebox and things like that. So kind of give us a sense of two extremes, and maybe, that will be like really nice for our listeners to hear,
Sure. Happy to. We've had clients come to us who've been in business for a number of years. Sometimes they haven't even filed taxes for the last 3 or 4 years because they were just so overwhelmed and didn't know what to do. They don't know where to start. They're kind of looking over their shoulder. And it's a really tough way for us to get started. But I always reassure new clients that nobody ever comes to us and says, we're hiring you because our books are perfect. They come to us because they're a mess. And we literally, it's really like putting a jigsaw puzzle together where we just start the process. We figure out their bank accounts. We start finding statements and we start asking questions and we gradually put it together. And I've actually had cleanups where it's taken me a full year to get an account completely current and up to date.
Wow.
On the other hand, I have a number of retired military people who wisely got into investing while they were still in the military.
Interesting.
And some of them are active and some of them are retired, but they're uber organized. And we love picking up these clients and we get lots of referrals from them because these are people that led very organized lives.
Sure. Right.
And they invariably, they will come to us and they will have a spreadsheet with all of their bank accounts, all ready to give us the information.
You love that.
I love it. They'll have a Google Drive and they'll have a folder for every single property they own. They'll have every property management statement they've ever generated. They'll have every mortgage statement they've ever seen.
Awesome.
They'll have every credit card statement. And they didn't know what to do with it, but they were smart enough to keep it in an organized fashion.
Unbelievable. That's awesome.
Yeah.
That's awesome.
And so we can take that, and it still takes us a long time, but at least we're not searching hither and yon for everything.
Sure.
And we can turn that into a proper set of books.
Awesome. Thank you, Dave. We're just about time for the episode, Dave. I appreciate your time. Give some of your best advice to investors as they are planning to scale up and things like that.
Well, the one thing I can say is that, and we're investors ourselves, so we know this, but the typical entrepreneur is somebody who may be great at going out and just talking to people, finding deals, digging for deals, digging for information. But the details and the backstory is what always escapes them. It's very, very typical with type A people, very typical with entrepreneurial people. And what we tell them is, get good at what you're good at doing and outsource everything else.
Sure.
And one of those things to eventually outsource, of course, we're self-serving, is bookkeeping. Sure. But just like you outsource, somebody to do your direct mail, you outsource where you get your rental list, all these other things. Just think of us as another outsourcing option to take off your plate. And either it makes it so you can go find more deals, or maybe you can take Friday afternoon off once in a while.
Absolutely. Those are wise words, and I definitely agree more there, Dave, is that focus on your strengths and perhaps delegate, automate some of the other things that you're not good at, or perhaps don't add as much value personally to your business in general. So I appreciate your kind words, Dave. It's been a pleasure having you. Please tell our listeners how they can get in touch with you and find out more about you.
Well, the best way to reach us is through our website, and the email address, the website address is REI Bookkeepers.com.
Simple
Bookkeepers with an S, very simple. REI Bookkeepers.com. It's there's just a little bit of information in there about us. There is a button where you can schedule a free consult, and we're happy to talk. Even if you're not ready to hire us, I'm happy to provide the information so that you can, when you are ready, you'll have the information in order. And we believe that's really important. I would love to have everybody, get organized even before they need us. And we can provide that information, but we do free consults, and you can schedule right on the website. Best way to find us.
Awesome. Thank you, Dave. It's been a pleasure. And listeners and viewers of the podcast can also find all our episodes at premiumcashflow.com. And experts like Dave and many others are kind enough to come on to show and share their expertise. At the website, we also have many more news, details, and reports and things like that, where you can learn a lot about different aspects of investing, bookkeeping, accounting, and things like that. And if you're interested in investing with us as well, we have on the website Invest With Us button, where you can send us a message and we can schedule a brief call and find out what you're looking to do, what your goals are, and perhaps if things align, we can present you with some lucrative investment opportunities as well. So it's been a pleasure, Dave. Thank you for coming on. I appreciate your time,
Thank
and
you.
I look forward to hearing with you from future as well on a future episode.
Thank you so much. It's been a pleasure.
Thank you, Dave.
Thanks for listening to Premium Cashflow Real Estate Investing Podcast. Please join us at premiumcashflow.com to sign up for weekly updates, research articles, and more. We will see you again for another great interview with an expert guest.